Welcome back.
Welcome back. Welcome back.
Season 2. We keep rolling.
Keep it going, baby.
Yep. We took a little break, but now we coming back at y'all ass. Yep. Hey, talking cash. I'm Jeff Knows Money.
I'm Mojo Hill.
Y'all know what time it is. Last episode, we broke down the types of insurance for you. Even gave you an idea of where those types of insurance might make sense.
And we also have some insurance hacks. Ah,
Exactly. So this episode, we gonna show you how to take the insurance, kind of flip it, leverage it a little bit. Cause the one thing I can tell you, having worked with these people, the way normal folks look at life insurance and the way the wealthy people look at life insurance is two totally damn different things. There are some ways to use your life insurance that go way past the death benefit. So if you want to cheat the system with your life insurance, we're going to show you how to today. Coming up next on Talking Cash.
You getting ready to be a rich nigga.
If you don't take anything away from this episode today, I just want you to remember one thing. Life insurance is a cheat code.
for real?
Yes.
Mm.
And what code are we cheating?
What code?
The tax code. We cheating the IRS when we properly use life insurance.
Oh, I'm down with that. Hell yeah. Let's swindle and rob Uncle Sam and make it rain like Uncle Luke. Let's go.
Hey, the craziest thing about it is, it's legal.
It is? Oh man.
See, you was already down.
Oh,
You were down
man.
with the get down anyway.
I was with it anyway. I'm thinking high risk, high reward. I'm all go. Let's go.
See, you was finna Wesley Snipes this thing, but
Yeah, man.
you ain't even gotta do all that. It's legal.
So learn me something. Tell me how we do this. How we gonna pull this off?
All right. So first off, life insurance benefits pay out tax free. It's a big key. Tax free. So if you die, your family gets the money without paying taxes. Your retirement account can't do that. Your real estate can't do that. Your investment account that's outside of your retirement plan can't do that. At some point, all of those vehicles will be taxed some way or another. Life insurance is not.
Now, does it matter if I have term or permanent?
It doesn't matter.
Hmm.
If it's life insurance, that benefit will pay out tax free. So, doesn't matter what kind you buy, doesn't matter how much you buy. If it pays out a benefit, it'll be tax free.
Okay, now you're showing me I can cheat the IRS while I'm dead. But I wasn't going to pay them anyway at any point. Can I cheat them while I'm here?
Yes, you can, Mojo.
Proceed on.
Mm-hmm. So we talked about the two types of permanent insurance last episode.
Whole life and universal.
There you go. Now, both of them build cash value.
Correct.
Both of them allow you to take a loan.
How so?
The key is the loans. Now, do you pay taxes? Like if you get a car loan, do you pay a tax on that loan?
No, it's a loan.
Exactly. You get a home loan, do you pay taxes on the loan?
No, it's a loan.
There you go. Now, if you borrow money from your policy and it's based on the amount of cash value, you don't take out the cash value, you borrow against it,
Borrow against it.
it's a loan, right?
Correct.
Do you pay taxes on the loan?
No, you don't pay tax on the loan.
But now you do have to pay it back, right?
It's a loan, right?
That's right.
Okay.
Now, I got to change the way you think. Because when we hear loan, it's automatically a bad thing to us, right? Because that's debt. We hear loan, we're going to take some money out. Somebody going to tell us an interest rate. We're going to have to make payments for a certain number of years. And then we repay the loan.
That sounds like a couple people that owe me. I've been looking for about 7 guys about 11 years. Them $20 then turned into $642.17.
They ducking you.
I ain't lying.
Look.
Can't even get a single bill no more.
Oh, Lord.
I walk in the store, they ducking. But proceed on.
Them the guys that just walk up to you. You done forgot about the $20 and they just remind you because they know they wrong. Hey boy, I ain't forgot about you.
I ain't
now.
forgot about you now. You know what I'm saying? Stuff going on, man. I need the gas. And my little cousin nephew had died. I'm like, I'm sorry to hear that. I'm sorry. He had to give her all that. You just gave him
Shit, I'm walking away like, man, who was that?
I ain't lying.
I ain't forgot about that damn $15.
I ain't forgot about that,
Hey, bro,
man.
I got you. I
I
got you
got
now.
you. Don't you worry about what you did for me. I ain't gonna
Man,
never get what you did for me.
where you be at now? I'm gonna pull up on you.
I'll be right here. That's why every time you see me right here, you go that way.
That I was about to say. That's why they asking. They trying to figure
They
out
try
where
to make
you
sure
at.
exactly so they don't be there
You in the barbershop every Friday?
every Friday.
I'm coming on Monday.
Go to a whole nother barber.
I'm finna get this nigga to come to my house and cut my hair.
I like how he did my bald fade. Had my bald fade right, had my mustache looking like a young boy.
That's all right. That's all right.
It happens.
That 15 now probably like 20, 25. Ain't trying to give them that. But that's how we look at loans. It's a bad thing. Now, where I got to get you to twist, change your thinking, is way loans work in insurance. So think of it this way. You borrow against the cash value. Insurance company sets a rate. But your cash value continues to grow at a certain rate. If you have properly structured your policy and funded it, the growth on that policy will cover the amount of interest that is growing on that loan. So you are not actually paying back the interest. The cash value is doing that. Some insurance companies even structure your policy so that the interest rate charged on your loan and the interest rate that your cash value is growing at actually nets out. So it's a zero sum game. So you basically are covering everything within the cash value that you've built up over the years. And then when you die, the overall outstanding loan amount gets paid back with your death benefit. So let's think about this and make it simple. I took out a loan and I borrowed money.
Borrowed.
Got to say that for the IRS. This was a loan, so I
Borrowed
borrowed the money.
Yeah.
And because I borrowed the money and it's a loan, I don't pay a tax on it. But I never actually had to repay it because I funded my policy the right way and I set the policy up the right way so I can take the loans. Now, we're going to take it a step further. So we already know I can take a loan, because I'm borrowing, and I'm not going to be taxed on the loan, right?
Correct.
Okay. Now, let's say when I start working or when I get my cash flow right and, got my bills settled, I do one of these policies, and for the next 20 or 30 years, I just fund that policy. Then when I hit retirement, I take out a loan each year in retirement. Know what I just did?
What?
See, now I'm pulling my retirement income from my policy. What's the tax on a loan, KB?
Well, it's low. It's a loan, so there is no tax.
So if I'm taking out that loan each year, and that's how I'm funding retirement, I have basically created an income stream with how much in taxes?
Nothing. Tax free, baby.
Zero. You just retired tax free. Now, I don't know if everybody got that. So we're going to run it back again for you. Fund the policy while you're working.
Check.
Hit retirement.
Check.
Take out a loan.
Check.
Live off that loan.
Check.
What did you pay in taxes?
Nothing.
How does the loan get paid off?
On the death benefit.
It is a loan in name only. In function, you just created an income stream that per the IRS code is not taxable. That sounds pretty damn good to me. Yeah. Let's give you some real numbers. Let's say you're 35 years old. You take $10,000 a year, put that in an index universal life policy. You can look that up. And you do that for 20 years. So from 35 to 55, $10,000 a year. You put in $200,000 over that time. At the age of 60, you hit retirement and you decide, I'm going to start taking out loans. I'm going to take $30,000 a year. I can do that for 30 years. You put in $200,000. You took out roughly about $900,000. And your family still has a death benefit at the end.
Oh, that's sweet.
Now, because that 900,000 was a loan, Mojo, what's your tax bill?
Ain't no tax.
You just put in 200 and took out damn near a million, and you didn't pay anything in taxes. And then at the end of that, your family still got money, and they didn't pay anything in taxes on the money they got.
Jeff, you know what that sounds like?
What's this sound like?
A win-one. Everybody.
I thought you were about to say a scam.
Well, listen, that's a win-one too. But you beyond winning. You done won it. That's a win. You winning and you won it.
You won and you ran the score up.
I ain't lying.
You done you skint they ass up both ways. You took your income tax free and then gave your family money tax free at the end. Now, that's one case. Let me show you another one. Let's say you own a business. Business been going well. You've been funding your policy, set it up right, put the right amount of money in it, and then you ain't got nothing to do with this beyond your control. Coronavirus hits. Now your business dried up. You just need a way to make it. Banks ain't loaning money because, hell, they don't know how long this is going to go on either.
Right.
How do you make it?
Borrow from your policy.
Yeah, you got a policy you've been funding properly. You can borrow from it. Now, you're in a situation where if your business needed funding, you can accomplish that. And what did it cost you to do that?
Nothing.
Did you have to report that as income?
Nope.
It's a loan. Did you even have to pay the loan back? Nope.
This is essentially the definition of getting it in blood. You get it when I'm gone. Get it in blood.
That's it. So this is how
I like it.
the wealthy are using their insurance policies. This is completely different from how insurance is sold to our community. And this is something totally new to our community. But business owners that I've worked with, I've seen them where they were in situations where business might have changed, cash flow changed. You got to meet payroll, call your insurance company, tell them to cut you a check. And here's the crazy part, because you're not doing it through like traditional finance. So like at a bank, you got to go meet with somebody, fill out a bunch of damn paperwork. They got to pull your credit. You got to show that you're credit worthy. You got to show that you can make the payments. Oh, your debt to income this, your debt to income. Hey man, my debt to income can be $1 to 1 million. That's still my policy. And if I want a loan, guess what they're going to do? They're going to send me a damn check.
Yep.
Matter of fact, they probably just going to direct deposit, and it doesn't take that long.
I wish we had this information out earlier, because I know a whole lot of business women that went on their OnlyFans and a whole lot of businessmen that went to the chicken house. It got rough out there. It got rough. OnlyFans in the chicken house. It was a bird. It was breasts everywhere.
Just breasts and thighs.
Breasts and thighs everywhere.
But now, see,
OnlyFans in the chicken
if you
house.
was classy on your OnlyFans, you were just doing feet videos.
Just feet
for them real freaks.
Them foot fetishes. Want to see that toe jam?
Mm-hmm.
Ow.
No, baby, no polish. Don't put no polish on.
Don't put no polish on there.
I like black toenail polish.
Let me see that big toenail kicked up like that. Yeah.
If it ain't a bunion, I ain't trying to see it.
You had on sandals today, didn't you?
I can smell it through the computer. You're sick. But that's just a use that people don't think about. I'm just trying to just open the playing field for you guys so you can see it ain't just about death benefit. And this is a really important tool. Let me give you another one. Okay. Raising your kids. Let's just say you have one of these policies. You've been funding the policy. Time for your kid to go off to school. Need help paying for school. Student loans is kicking everybody's ass right now. But guess where you can get your money from?
Well,
get it from your policy.
You damn right.
And guess what? Because it's inside of insurance, you do not list that in financial aid forms.
That's sweet. That's so sweet.
Getting completely over.
That's a win-one.
Let's just say you need to buy a car.
Really?
You can borrow that from your policy.
I can upgrade.
You can upgrade.
Out the policy.
Don't even need a credit check.
I can win one again.
Credit can be 210.
Oh, Lord.
Your credit can look like an NBA final game score, just a good old 137.
137, 146.
102, just
Mm.
98, any of that. Your credit score reading like a radio station number.
Oh man, that's
Hot
bad.
97.
A hot 97. Which credit rating is a hot 97?
Yep, still got this loan though.
Still got this loan.
Okay. Now, I know what you're thinking. Well, damn, Jeff, I'm too old. I can't do this because the cost of insurance is going to be too high. That's a valid argument.
Valid one.
Let me run this by you though. Do you have some person in your house that don't contribute in any way to the income of the house, but they damn sure contribute to the bills, and they usually about yay high? They may refer to you as mom and dad.
Yeah.
You got any of them?
Uh-huh.
Put a policy on their ass.
Yeah.
Because guess what? Their cost of insurance is real low because they're young. Put a policy on your child and fund the hell out of it. And you're the owner of that policy. You control it. So guess who can control when they take a loan? You can. And worst case scenario, if you never need to tap it for a loan, you're just building up cash value for your kids. And then when they get in their 30s and 40s, guess what they have? They have a place they can go to and they can get money from it without having to deal with the banks.
Oh, this sounds like a whole lot of win-one.
Hey, y'all, banks don't really like us like that.
Not for real, for real.
Just kind of a way
They
to get
just
around
deal
it.
with us because we just happen to have a few coins to push around, but they don't really give us the
That's it.
opportunity
Yeah.
to really power up like how we should.
Okay. Another one. I told you got to use for it as a business owner, an existing business owner, you can use that policy to help, cover some cash shortfalls. But think about this. The one thing I can promise you is going to be tough for you to get a loan for is tough for you to get a loan to start a business. But damn it, if I took my kid and I put one of these policies on them when they were young and I funded the hell out that policy, when they're 25, 30 and they want to start a business, guess what's going to happen?
Got the funds.
Here you go.
Here you go. Got the funds. Do your thing.
Mm-hmm. And this is the concept. They call it the infinite banking concept, but a lot of people don't go into the ins and outs and the numbers of how you actually do this. But the one thing I would tell you is this is what you got to do. You have to fund the policy, and I would tell people you want to fund it minimum 10 years, probably even 12 before you really start to look at trying to take money out of it. Those first 5 to 10 years, you're paying up that extra insurance cost and all the expenses and everything that's involved with the company issuing you a policy. So don't think that this is something I'm going to start today and 3-4 years from now, I'm going to go tap in. That's not going to work. This is a long-term play. You want to do this 10, 20 years, and you want to plan this out. So if you're in your mid-30s now and you're trying to use this for retirement, you got to get started now. But the big key is whatever premium they're telling you need to pay, they're going to give you on a universal life is going to tell you this is the minimum premium. Let's just say the minimum premium is $80 a month. Then you're going to have a term called the target premium. Target premium might be $125. Then you're going to see a number that says this is the maximum amount that you can pay. That's the number you want to hit. That could be $200 a month. You want to be as close to that maximum number every month as you can possibly get, because the more you put in, the more it's going to produce on the back end for you. Because remember, we're just prepaying the cost that'll be there on the back end when we get older. Once you do that, you can look up and 15, 20 years down the road, you have an asset base inside of your insurance policy that you can access for whatever the hell you want.
So it's pretty much paying it forward. You know what I'm saying? Fruiting your future.
There you go. That's it. That's what we're doing. Now, again, you have to make sure that you are hitting that top end number. It's not going to work if you're just doing the minimum. It can work if you're doing the target, but it works a lot better if you are hitting that top end number. Now, one last insurance hack I'm going to give you. Remember we talked about term insurance?
Right.
And what was everybody's problem with term? At the end of the term,
wait.
Yeah, your insurance benefit is gone.
You might not be able to get any.
That's right.
Possibly at the end of that term because of your age.
Does it sound better if I tell you at the end of that term, if you did not die, you at least get your money back?
Hey man, things didn't work out, man. Here your money.
Doesn't that sound better?
Yeah, let me go and get that.
If you buy a term policy, look for a policy that allows you to get a feature called return of premium. And all that means is if you didn't die in that 20 or 30-year term, you get your money back.
Hey, cuz, congratulations. You made it.
That's it. Hey, my boy.
Good
Hey.
job.
Good job on not dying, my nigga.
Good job.
You still here.
But you did your thing. Here you go.
Hey, you came through strong for me on the office parlay too, because I said you were gonna make it. They didn't believe.
Boy, they had you locked in at 22. Boy, listen. Boy, I'll pump it for you, boy. Here you go.
I put on for you, my boy. We both winning. Win one.
Win one.
Yep. Now, here's another one. Again, drawback on term is over. I don't get anything. You can't get your money back, but here's another thing you can do. If you're buying a term policy, make sure it is convertible. What does that mean?
Top drop back.
Close.
Huh?
It's convertible. That means that I can take my term policy and convert it to a permanent policy at any given time during that term.
I like the sound of that.
Now, here's why this is important. Because right now, maybe all I can afford is term. But then 10 years from now, my money's different. Now I want that permanent policy. I can get it, and I don't even have to go back through underwriting. So if I bought a policy in my 30s, and it said I was healthy in my 30s, and I got a great rating from the insurance company, when I get ready to convert that policy, let's say I'm 50, and I'm talking about health and shambles, just been a hard life, just a lot of
rough out here.
A lot of drinking, a lot of smoking.
A lot of drinking, a lot of smoking.
Doesn't matter. They're going to convert it based on my original health rating.
Oh, that's sweet. This is a cheat code.
It will be based on your age, but you will not have to go back through underwriting. No blood work, no urine samples, none of that.
This sounds ideal.
And then you can start funding it to do what? Get that loan.
Get that Liz on.
That's the only loan you ever gonna seek out in your life.
That's it.
I need to get some debt on the books.
Get some debt on the books, please.
And messed around and paid stuff off. I need to get this loan out here.
I ain't lying.
Hopefully, this has been helpful for y'all.
It's been so helpful.
Hey, cheat codes, man.
The cheat codes.
If you're doing it right, you can get out into retirement tax-free. If you have questions, make sure you hit the show up. Check out our social media handles. We're on Twitter at Talking Cash. We're on Facebook and the Instagram, Talking Cash Podcast. And if you want to email the show and get more information, info@talkingcashpodcast.com. Or Mojo is somewhere on the west.
On the west.
Just run up on him.
Passing out the cheat code. Last cheat code I gave somebody was for Contra to get them 50 men. Up, down, left, right, A, B, select, start. That's it.
Yep, that's it.
That's the second code.
My cheat code was to get you the blood on Mortal Kombat on Sega.
Oh, man.
The original one.
Oh, Lord.
You just throwing uppercuts.
Growl.
Or you cheating with Sub-Zero and you won't let nobody get up because you just keep freezing.
Keep freezing them. Just keep freezing them.
Yep. Keep freezing and put that leg sweep on them.
That's dirty.
Yep. Cheat codes. That's what we about.
That's all.
Hey, we'll catch y'all on the next episode.
We out.